Wow, holy moly. Good morning, trade pros. Third time's a charm. I suppose this is George Papazov, president and founder of Trade Pro Academy. And I'm really excited to be here with you today this morning. I tried to do a morning market update two times, Monday and Tuesday. And finally today it worked. Hopefully we continue to roll. And I want to announce that morning market updates are back. The reality and the truth is that I really did miss you. And now that I'm back to trading, let me adjust the mic real quick. Now that I'm back to trading, I really wanted to go back to doing morning market updates as well, because to be honest with you, I'm doing the research, I'm doing all the work anyways, and I really wanted to have this opportunity to share it with you yet again, because I think this is a really big part of our day together. And I last did one in 2022 of, I don't know, July. It's a very, very long time, and Victoria's been doing them since. But this part here was my favorite part of the mornings and gave me something to look forward to every morning, talking with you and interacting. So here we are. Let's kick it off. Today is Wednesday, October 8th. I have some stuff to talk about. And we're going to do this at 9 a.m. every single morning, 9 a.m. Eastern, 30 minutes before the market opens. Catch me here live on YouTube every single day. We're going to keep it going. All right. Equities trade higher this overnight session. Euro stocks is up. DAX, FTSE as well. U.S. futures, modestly green. ES up 0.1%, which is S&P 500. NASDAQ up 0.2, Russell up 0.4. Dollar strengthens as well overnight. Bonds yielding at 4.11%, and crypto down 1.2%, and Ethereum down 4.2%. They're kind of the big, let's say losers, but the big losers in terms of change for sure. Commodities, oil's up 1.3%. Oil continues its rebound. Copper's flat, and gold 1.5% higher, holding above $4,000 an ounce. This is a historic rally for the precious metal. Ray Dalio said investors should be allocating as much as 15% of their portfolios to gold. So Dalio, bullish on gold. He's kind of like a famed portfolio manager. And look, it's one guy's opinion, so take it as you will. All right, today's key events. We have so many Fed voters speaking. 1, 2, 3, 4, 5, 6 of 6 Fed speakers, and then the meeting minutes at 2 p.m. Eastern. So we got a lot from the Federal Reserve today. Today's a Fed day, and we're going to talk about my trading plan, the zones for the S&P 500, and what I'm seeing and my read on the market, just to finish up the morning session. But just so you know, at 2 p.m. is the main catalyst and the main volatility event. So if the morning kind of starts out slow, you know why. All right. Retail mania. This stat surprised me. Retail investors poured in over $100 billion into U.S. stocks in the past month. All right. Morgan Stanley says it's the largest 1-month inflow ever recorded. So it's just this historic rally. There's a lot of buying, and heavy buying has squeezed out short positions as well. By the way, short exposure is up 18%. And everyone says, this rally can't keep going up. Well, it can actually continue to go up as long as there's heavy manic retail buying and short exposure continues to increase. The more people that short and get into short positions, the more buyers we have above, which is one of the foundational principles and understandings for order flow trading, right? If you're short, you're going to be the buyer. You're always wondering, well, the market can't keep going up, can it? Who's going to be the buyer? 18% increase in short interest. There's our buyer. You got to buy into that short at a loss. All right. That's that. So record month for retail investments. Dang, my nose got itchy. Tough to not scratch it on live. So next thing we're going to talk about is the title of this morning market update. Margin pressures on AI, and this is very interesting to me. This is what the report says. So I'm getting these text messages. Phones are so distracting. I don't know why I pay money to be distracted. This is when you're paying for a phone to get notifications, and you're allowing people to fight to take away your brain power, to fight for your brain space. I don't know why we pay for that. I'm going to silence it. You know what? It is silence. Look, the red thing's on. Anywho, I digress. As I usually do on these. There's a report out from Oracle's AI cloud division that showed a $900 million revenue amount. all right, from renting its servers powered by NVIDIA chips. Okay, so far so good. You're like, how did this put pressure on the stock market yesterday and on the AI sector? $900 million is a lot of revenue, right? But only 125 million in GP, in gross profit. Fun fact: those are also my initials, my first and last name. Only 125 million in gross profit on a 900 million revenue. That's a 14% margin. That's low. All right. The business actually not lost nearly 100 million on an operating basis last quarter. Okay. So, pardon me. That's a sharp contrast to Oracle's traditional software margins of 70 plus percent, right? Highlighting, how expensive AI infrastructure has really gotten to maintain. All right. You think about it, you got energy use, cooling, data center overhead, and these things eat into profits. And Oracle is just pricing aggressively to attract new AI clients. So we're at the stage now of AI where there's competition. There's so much competition to win these new contracts that you're starting to take less and less money just to win the business and then think about monetizing it down the road. Because this industry is so young, so fresh, that you don't know what's going to happen realistically in the next 10, 15, 20 years. But you do know AI is going to play a big part in whatever happens. And it's kind of like, let's cut down our profit margins. Let's get you as a client, and then let's work our way towards the future together. So it's kind of taking, it's spooked the market right now because 14% profit margin is a big revelation. It's scary as a shareholder investor, but as a visionary, it's kind of necessary, right? You win the business and you work towards the future together. In fact, you build it together. So taking a little bit lower profit margins now is actually building a relationship which you can monetize further into the future. So it's great. All right. But it spooked the market a little bit, what can I tell you? This is how things go. Investors are overly reactive to real-time news and underly reactive to the prospect of the future, right? Because it's easier to price now. It's closer to when it's going to happen. All right, FOMC meeting minutes today, 2 p.m. Just to remind you, Fed cut rates by 25 basis points to 4% from 4.25. It's kind of the first rate cut. Powell described the move as risk management, stressing a cautious and flexible stance. It's like a cut, but sort of like don't guarantee further cuts. We'll see. All right, committees most united that Mitt Moran is the only member who prefers a 50 basis point cut, right? But the neutral rate estimate spans 2.6 to 3.9%, which means it's like a wide range of internal views on the FOMC, the Federal Open Market Committee. All right. There's a whole bunch of things that happened in the last rate cut. And today we're going to see the meeting minutes behind that. So expect to see some volatility between 2 p.m. onward to close out the session. All right. If you're sitting there trading at 2 p.m. and things just start going up and down, you know why. All right. Here's my daily market read. And honestly, probably the most important part of this update, I think, and you guys tell me, it's the first one in like 3 years. So I don't have too much expectations for it, but I've decided that this is the most important thing out there. All right. So again, I trade the ES futures, S&P 500. It is a broad market index. It's the large cap index, S&P 500. That's me. So I trade the futures on it. And these are the things I am going to give you levels on a morning by morning basis. Let me just go in focus mode for a second here. All right. So here's my daily read. Prior day high of the S&P 500 futures is 68.01 Let me just make sure numbers are fresh. Yeah, it's the same thing. All right, 68.01 is the prior day high. The overnight high comes in underneath it, 67.76 I'll tell you what all this means in a second. Overnight low 67.58 and prior day lows below that at 67.47. So basically, yesterday price action pushed to a high after it opened. All right. And we in the room were really kind of dismissive of that high. To be honest with you, we're like, look, this is market's heavy, it's top heavy, lots of longs, a lot of positions on the long side on this index. We're gonna have to shake out some of those longs into the early session and see what happens from there. Well, the shakeout happened. All right, lots of long paper was stuck. We rode the trade down. I was short for some of it, not all of it. No one's ever short for all of it, but not everyone's short some of it either, right? So I was on it for some. They sold off pretty hard at the markets and they hit day lows. But we were right about that theory. Overnight, we recovered half of the session losses. We kind of pushed up to the halfway marker of where we opened to where we lost on yesterday's session. Okay. So this is what I look at a lot. I look at something called call walls and put walls, and they kind of help me dictate the levels. And really, when I trade, there's only 4 levels as a day trader that I care about. 1, 2, 3, 4. And I'll give them to you. That's not a secret. It's not like I'm out there drawing these levels on what I claim to be something proprietary. All that proprietary stuff is horse crap. If you sell it, it's not proprietary. That's the news I'm giving you right now. So I'm on YouTube. I guess I'm selling it. So here we go. The prior day high to me is the US session. Okay. And the prior day low, that's the second level. And then the other 2 levels I care about is an overnight high, which is after the close of regular traded. So extended trading hours, ETH level high and ETH level low. These 4 levels give me the context of everything I need to know in the market, how they open in relation to each other, how they move, the width of it, the spread of each one, where they are within one another, etc. All right, so that and this. I also use options, short-term options, short expiry options to give me 2 things: call wall, put wall, and then just to see how the landscape of these options are expiring in the next 3 days, 3 to 4, sometimes 5 days. But you don't want to go too far out in time. You want the ones that are closest to expiry because they're the most relevant. So definitely the 0 DTE. So there's a call wall at 67, 55, 70. All right. It almost sounds like Paul wall. When I do the call wall, I should put my grill in. I don't have a grill, but it'd be funny. So these act as resistance. Why? Because sellers of call options will short futures, okay, which sellers are the dealers, will short the futures to neutralize their exposure, which caps the upside. It creates a sell level at these call walls. All right. So that to me is 67.55, and on the upside, 67.70. And if you look at the market right now, where do we get up to an overnight high? 76 quarter. We sold back down under the 70, and we're dancing around the 70 right now. I wonder why. Then the next level is the put wall, which is the downside support. That's 67.30 to about the 70 area, 67.30, 67.70. That's going to act like a magnet for price, okay? Because you have high put and call volumes stacked close together today. They're sandwiched, all right, which is kind of a signal for a short-term equilibrium, which makes sense because we have a Fed event, and dealers, because of this Fed event, are delta hedging aggressively there. Okay, so we're kind of expecting on today's session mean reverting chop inside of this range, right? Until some kind of major catalyst pushes us outside of balance, which is going to be the Fed minutes today, potentially. All right, so if I gave you the read for the day and then called it that, I got to go ahead into the trading room. Expect low directional clarity early, so expect some chop. You know, the rage bound behavior inside the 730, 770 on the S&P 500 futures. Watch that 67.30 closely, because losing that level turns the profile bearish into like 6,700, 6,680 really quickly. All right. And above the 70, watch for gamma squeeze into about 6,800, 6,820. All right. If especially these futures spike past FOMC, then we get there really quick, and we might even go above the 20. But that's where you got kind of the stick, where markets are going to tend to stick. You got your call wall, put wall, you got your resistance support, and the propensity to break them is lower in the morning session. Watch for some directionless chop, but watch that period for information for the high probability trade. Love you guys. So I got for you today. I hope you enjoyed it. It's the first morning market update from me in years, and man, it felt good. I hope you agree. Put some comments in there. If you're watching it, please don't make it weird. Just throw in a few comments so I feel like somebody out there is hearing something. I'm going to turn around and see what's up with you guys, and I got to end this. But yeah, I love you. We're going to do it every morning. See you again tomorrow at 9 a.m. And have yourself a great day. That's today's morning market update. Take care. Goodbye. Street Salsa, what's up? Thank you. Good morning. And Casey, you're most welcome, sir. Appreciate you. You guys have a great rest of your day, all right? And I'll see you tomorrow at 9 a.m., every single day at 9 a.m. And thank you, everybody. Take care. Goodbye.